Good morning, stackers. Copper is killing it, shooting up 18% yesterday to make a brand new all-time high. Where to next? We'll take a look at the copper price. We'll take a look at copper miners here in Australia as well, see if there's any that look a little bit juicy. And of course, we'll do the regular gold, silver, and other precious metals price analysis too. You are watching Good Morning Stackers with me, Joe Main, for the 9th of July, 2025. Brought to you by Perth Bullion Exchange, perthbullion.com.au. Mastering the markets, masteringthemarkets.com. Let's do a quick synchronized slurp. Ready? 3, 2, 1. Slurp your beverage. All right, let's go. This is copper. Wow. On the daily time frame, priced in USD, new all-time high, $5.56. You can see very clearly we had that move from $5 roughly all the way up to $5.90 pretty much. So an 18% move. Now we're hovering at around about $5.50 something. So let's shoot back out to the monthly time frame. And we have been talking about this for a few weeks now. We've been talking and we've been adding copper into the analyses, okay, because it has been coming out of a very clear accumulation window. And this is the accumulation window that goes back all the way to roughly February of 2021. You've got some outlying there, but that's kind of your general accumulation range with some outlying here. And we've been butting up against it. 1, 2 attempts to break and hold through $5. And then I did say the beautiful kicker was the fact that last month in June, we closed for the first time in the highest ever close for a month ever in the price history of copper. We finally closed above that $5.10 mark. And we've had on the daily time frame, you had a move back down and then beautiful move just broke out. Now, I don't know exactly the reason why. Was there a specific piece of news? I don't think so. It's just normal market moves. I think enough buyers were ready to go, yeah, I'm pulling that trigger right now. So they did, and then everyone piled in. So great to see. Let's see, in terms of copper itself, what are the next potential prices? Because we're now in price discovery. Okay, so we'll do some blue sky thinking. If the price goes higher from here, where could it potentially find some major resistance? And then we'll talk about some copper miners and then obviously get into gold and silver. So here is the usual indicators. And I'm looking at the relative strength index here. The one thing I will note, and it's not to be bearish at all on copper, but I will note that we do have to get through this level here in order to say it's not a potential bearish divergence on a longer time frame. So what I mean by that is the price can still go higher from here, but what I need to see it do is the following. It needs to crack above here in order to say that the trend might continue for the longer term. So I need it to get, so the price can go higher, right? Higher, pick a pattern, pick a price, whatever it is. But where we find a pivot point, if we find a major resistance somewhere and that resistance happens to coincide with anything at or below that high right there on the relative strength index, what that sets it up for is a large bearish divergence on a monthly time frame. So just keep that in the back of your mind. Great to see copper at new all-time highs. You've just really got to watch or follow people or subscribe to people who are watching the following, such as me, like the relative strength index, to give you an indication, because you could be piling in, or your friends might be telling you, oh, copper's the next best thing. It's breaking out of accumulation mode. Oh, we're up to $7.50. Oh, we're up to $10. And you're going, yeah, that's great. And it's fantastic. You've made money, but just watch out because we haven't cleared through there. Now, if we do that, if we don't post a major resistance level until we're above here, that's very bullish. Okay, it's really bullish. It means it's got a decent period of time to go. So just watch out for that. Okay, but let's do some blue sky thinking anyway. And let's take the Fibonacci. And I think I might want to take it from, I'll take it from I might take it from this high and this low. Let's see. I might take it from this high and this low and see where we can potentially come up to. Now, interestingly, I do find this interesting. Now, this is not a fully historical chart for copper. I wish I had a better one. If I can find a better one, I'll do that for you, and I'll use that for next time. This goes back to 2004. So from this high and this low, you have the 1.618 Fibonacci, and we've actually already hit it. And we hit it, bang on. What do you know? On the weekly time frame, we've hit it pretty much exactly. So that's acted as resistance so far. 1.618 extensions from significant highs and significant lows, and you'd call that a significant high and a significant low, usually get tapped at some point and they become resistance, and it has so far. So pretty much bang on. What we need to see is it clear through there. And then the next area I would be looking for, again, based on this high and this low, is at around about $8.40. Okay, so I'll pop that in for you, just to keep it in the back of your mind. We'll call it $8.40 because that's what it is. So $8.40 right there. Cool, so keep that in the back of your mind, maybe some resistance at $8.40. But again, we're in price discovery now, so who knows, right? But that's a pretty decent level, okay? From here, for example, and I'm not saying buy right now, but if you were to get into some kind of copper ETF or something, that's a 50% move. Not bad, okay, not bad at all. So do watch for $8.40, I think would be some major resistance. Could I be wrong? Yes. Could it shoot to the moon? Absolutely. Could we not find it there? Of course, but $8.40 is around about that for me. I would be highly considering taking some profits around about that price there. Let's see on the daily time frame. What can we notice? Daily, we've just gone into extremely overvalued on the daily time frame, so you've got room to move. So you've got room to move higher. So I just obviously need to see that break of $5.90. Then I'll say potentially, an $8.40 could come on the shorter term time frame if we're taking it from this high and this low. So let's do that very quickly. This high and this low. Any shorter term Fibonacci, well, you've got $6.20 and $7.50. I'm just going to stick with macro for the moment, so that $8.40 level, I don't mind. That's pretty good. Yep, watch for that. And if we break back down below the $5 level, $5.10, $5 roughly, that would be signaling, oh, okay, this is some kind of liquidity grab where it fakes people out and then back down. So you don't want to see it get back down into the green box. That's pretty much it. If you get back into the green box, then it's suggesting that it's a failed move, a failed attempt, and then you'd be looking at a faster move to the downside. And let's just play devil's advocate for a second. Where could we potentially be looking at? If this is a fake out right here, you don't want to see it close any lower than, you can get into the box and it might freak people out a bit. I really don't want to see it break that $5.20 basically, but you can get anywhere down to the bottom end of the zag zone from this low and this high, if that's the high, and then that sits right at that support level. So that is at $4.75. So please, no lower than $4.75. Onwards and upwards, hopefully we go, and watch for that $8.40 late. Could be soon, I don't know, but I think that's a key one, $8.40. So that is copper. Let's take a look at some copper miners on the Australian Stock Exchange, and there's one actually that anyone can get into as well on the New York Stock Exchange. So if you think copper will go well, you might want to consider having some leverage with copper miners. Now, rather than buying individual copper miners, you can buy the COPX. It's the COPX. Okay, now, none of this is financial advice. Of course, I'm not saying copper's going to go through the roof from here. You never know, we could just head back down, but it's great to see it out of that main accumulation range. So here is COPX, Global X Copper Miners ETF on the New York Stock Exchange. If I get rid of all of that for you, and show you on the monthly time frame, we're getting close to previous all-time highs. Previous all-time high is at $62.90 US cents. We've had this move. Let me get rid of a couple of things just so you can see it a little bit better. Yeah, so what I liked about it last time I talked about it was from this high and this high and this low, we are out of the 0.618 Fibonacci. So we're out of the zag zone or the zig zone, the resistance zone that you need to clear and hold above in order to say any potential of getting to new all-time highs. So from this high and this low, that's between the 0.382 and the 0.618. You can see here on the monthly time frame, we flirted around it for a while. Okay, it was resistance, a spike, but didn't close above it. We had an eventual close, but a fast move. It was a failed move, so a fast move to the downside. Resistance finally broke through, came up to the 0.786 right there. And we've just been, just faffing around for quite a bit. Hopefully this time is the time. So I need to at least see it hold that $41.70 level. And preferably we need to break there. So $50.70 is the one for me. Actually, no, I'm wrong because I popped in this Fibonacci here. Not that one. That one. I did that last time. Yes, I was smart enough to do that. So from this high, and let me get rid of that and I'll pop you in. There we go. So from this high and this low, I needed to see it clear. That level right there of $44.30. So far we've done that. That's a good sign and we're above it. So we broke through the decline here. Again, this is on the COPX. So what that means is you're buying into a share of a general basket of copper miners. So you're not exposing yourself, don't expose yourself to one specific, mining stock in case it goes down or whatever, individual stocks. Great thing about this is it broke through the downtrend line right here. It came back to test it perfectly, and that was at the 0.5 Fibonacci as well, and then we've broken through. So as long as we remain above $44.50, I'm very positive for COPX. All right, so that would be the easiest, the safest play to get into if you see copper spot price going up further and further, and you want to get leverage to that, because in general, where the price of the base metals go, miners can tend to have a really good move in terms of its multiples of the base metal, if that makes sense. So there are periods where the miners will outperform the spot price itself. That's true with silver miners to silver, gold miners to gold, same with copper miners to copper. So that is the COPX. However, if you do want to play some Australian, because a lot of my subscribers are obviously in Australia, if you want to play some Australian copper miners, I did take a look at a few. I am actually currently in one, and let me show you that one at the moment. That is CNB. I've talked about this. I actually did a specific video on it as well. I'll put a link to it somewhere. If I can. This is CNB. This is Carnaby Resources Limited. Okay, it's listed on the Australian Stock Exchange. We're currently at 43 cents. It's going to open a little bit higher for sure. Let's see, the market cap. It's not a huge market cap. It's just under 100 mil. Okay, and let me just quickly read for you what it is, what it does. Carnaby Resources engages in exploration and of mineral properties. Its projects include the Greater Duchess Copper Gold Project, Pilbara Gold and Lithium projects as well. So it's copper, so that will obviously benefit from the copper price movement just recently. But what I love about it also, it's in lithium projects as well. Just very quickly, I'll show you lithium. Lithium is also doing quite well. This is LIT. This is having a beautiful breakout move. It looks like it's going to, I'd say, potentially continue onwards and upwards. So lithium may have bottomed. You're seeing stocks like PLS, Pilbara Minerals, doing quite well as well. So not bad. So I like CNB, copper and a lithium play. So that's number one. Now let's quickly go to Grok, because I did have to ask it some of the other major I asked it, list the top 5 copper miners on the Australian Stock Exchange. So number 1 is Sandfire Resources Limited. This is SFR. Sandfire. Pretty good. Pretty good. We are currently at $11.60, roughly in Australian dollar terms. We're right up at all-time highs. The thing I would get you to watch out for with Sandfire, And Sandfire Resources engages in production and sale of copper, gold, and silver. So they're not just a pure copper play. That's a positive and a negative. Obviously, if copper goes, a bit higher in the spot price, it'll have an effect on the price, but it won't be like full on, okay, because it has other projects like gold and silver. And what are the prices of those metals doing? However, I do expect Sandfire probably to have a little bit of a boost today. The thing I would get you to watch out for is potential bearish divergence. That's the only thing, where the price is moving higher, but the relative strength index is moving lower. And like we talked about with copper spot price before, you've really got to clear here in order to say, over the longer term, it's not going through a bit of a momentum loss. Okay, so on balance of probability, Sandfire Resources, out of some of the others that I've looked at, wouldn't be the one I would necessarily get into for a play, at least today, or in the next couple of weeks if copper continues. I like it, but it's not the one I would probably get into. My humble opinion. Another one here is Metals Acquisition Limited, MAC, okay, a newer entrant. Metals acquisition focus on assets critical to energy transition. Oh, okay. So what's that got to do with copper? Oh, its primary asset is the CSA copper mine in New South Wales. Okay, I've never even looked at this. So MAC, it's called Metals Acquisition Limited. Let's have a quick look. MAC, Metals Acquisition, we'll go MAC, come on the ASX. MAC Copper Limited, sure. I'm sure that's the one. So here is MAC. All right, no problem. First look. You and I are taking a look at it for the first time. Very quickly, you've got there, you've probably got there. Ignore that spike. That's good. Okay. Let's see. From here to here, we are flirting with the zag zone at the moment. The market cap is 1.5 billion. Not bad at all. Okay, so here are the positives for MAC. So this could be one you might want to consider. So we are currently flirting with the zag zone. We've had a beautiful move through this downtrend line, so that's good. Have we also come through? Okay, you can also put that there if you wanted to. So to that close, but also to that spike, sure. We are just not out of the woods yet. And where have we found pretty much exact resistance at the top end of the zag zone? So I would suggest, it's possibly a great play. I would just need to see it clear and hold this downtrend line right there. So it's not one that I would jump into today, but it's one that I would be watching out for. So you need to clear that general area there, and then you might be looking okay. So on the weekly time frame, it's never been an extremely overvalued. It will get there at some point. So I think, barring black swan events and barring copper just tanking, I think MAC Copper, MAC, will do well. It's just it's not ready to break out yet. It hasn't shown the signs of breaking out yet. But I'm going to keep that on my watch list. How do I do that? I'll do that later. That is MAC. Cool. Let's take a look at another one. Now, Hot Chili. This is HCH. Hot Chili Limited. Now, this is a pure copper play. So Hot Chili is one of the few remaining pure play copper miners on the Australian Stock Exchange, focusing on copper projects in Chile. Hot Chili. It's considered a speculative investment, yes, due to its micro-cap status and development stage projects. So it's not producing, it's in the development stage. Okay, so this is a more risky play, but with greater risk comes greater reward if it does go well. So let's look at HCH, Hot Chili Limited. Now this is one I do happen to like better from a technical perspective. It's almost broken out. I wouldn't say it's 100% go time just yet, because you are butting up against some major resistance. And I've had this previously drawn in where you've come off this bottom here at 40 Australian cents. That's basically a triple bottom with a bit of a liquidity grab right there. So you can see here, bottom, faked people out right here. So that's your liquidity grab. Cool. It fakes people. It gets people on the wrong side. And then it goes, sucked in. So if you had been watching something like the relative strength index, you'd seen, okay, oh no, we've broken down here. Oh, it's never been lower than here. Oh no, it's all over. We are done. No, prices break down, or they break support or break resistance for one of two reasons: either to continue the trend lower, or to do this thing where they fake you out to grab liquidity. And if you had been watching the relative strength index, you've gone, oh, actually, we're an extremely undervalued, and we've never really gone lower. That's what happened last time. We were an extremely undervalued for hot chili. Oh, well, it had a beautiful pump. Here's the last time we did it there. We did it here. Oh, we're back down here. Oh, but we broke here. Oh, no, it's a liquidity grab. Okay, now that's good news. Okay, and you can also see very bullish divergence where you have the price making a lower low, but the relative strength index making an equal or higher low. So an equal low is fine. You can see that the two indicators, the price and the indicator here, are diverging. That's not going down with it. It's forming a double bottom, okay? Very bullish. The liquidity grab, very bullish, okay? So good news. On the daily time frame, it's almost about to crack up through this downtrend line. That is also good. The only thing I would say is that we're just coming up to resistance here when you have some trapped money that may look at getting out or breaking even at around about this point. So that's the little battle that you have to go through, okay? Let me show you on around about here-ish is the kind of battle you kind of have to get through. You could even say it's up to there if you really wanted to. No, it's actually about there. So that's the battle you have to get through, okay? So I would prefer to wait to see what happens. You could buy this on the breakout, and it's probably going to break out, and once the market opens, it'll probably open higher. But then again, you're going to battle with these buyers. Some of these buyers here, some of these buyers here will just want to break even because they're psychologically tired from being in. Or even, well, these guys probably not, because they've done quite well. So if you held here and you held all the way through here, if you held from here, yeah, you'd probably be getting tired and you'd want to get out. But these guys, like, oh, I bought here, it's going to go up. Oh no, we've moved down. Okay, excuse me, 1 second. Right here, we bought all the way here. Oh, it's going to go to the moon. Oh no, it didn't. And some of them will be getting out around about here. So what you'd want to see is something like this, where you come up to this area, you test it, and then you do something like this thing where you finally break out, something like that. And if you really want, you could wait for this resistance there, and you could wait for the breakout of the downtrend line. So that's sitting at around about 78 to 80 Australian cents. Okay, I'm just probably not ready to take the plunge just yet. I think for me though, if it does something like this, like that, and then breaks that, then I'm happy to probably take the trade and then watch it to here. And then if it does break down, then I'll get out. But if it does break through, great news. So that's hot chili. I am watching it closely. I am not in it, but I will be in it if the opportunity presents itself, and obviously if copper continues heading up the spot price. So that's hot chili. And I'll do the two more. There's AIS, which is Aeris Resources Limited. Sure, AIS. Out of the three I've done so far, I like hot chili probably the most, although it's just not ready yet. Here is one that I did like, that I saw earlier. And this is at almost breakout stage. So this is AIS, Aeris Resources. Not a huge market cap, I don't think. It's not too bad. It's 175 million. You can't put it into the big boy status. So this operates the Triton operations in New South Wales and North Queensland, so copper producer, that's good. 5,400 tonnes of copper in June. Its 2025 guidance is, wow, 21,000 to 25,000 tonnes. Wow. So in the June quarter of last year. Okay, so it's increasing its production. That's good, with additional projects like the Stockman copper zinc gold project, silver project in Victoria. Interesting. Okay, this is AIS. What I like about it from a technical perspective is you had the big liquidity grab like we talked about before. So that's that bottom right there. Then it sinks down here and people go, oh no, it's over. It's never going higher again. And then it fakes you out because you had beautiful bullish divergence. Oh, actually, from there to there. No, from there to there. From here to here, lower low. And that is an equal low. Once again, yeah, no, it's actually slightly a lower low. My apologies, it's not that one. It's this one. It's that one is the one I saw from here. Now that's very good. From there to there and there to there. Where are we? That's an equal low. Okay, so bullish divergence. We had that beautiful move. We came back to test. We broke through the 0.618, but we did come back to test bang on the 0.786. So we're not out of the woods yet for this, but I do like it potentially. So I am going to watch it. And if you want to stay updated, watch it with me or just follow me and I'll let you know what's going on. We've got to get through this little zone here. And I really want to see it crack through 25 Australian cents. But I tell you what, I'll probably be taking a play if it cracks through right about here. Cracks through that decline. If it does something like this and then comes back to test as support and then breaks through around about there, that's around about 20 cents. I will probably take a small position there. So that's what I'm looking at. That's AIS, Aris Resources, and the final one. Again, it's more risk, more reward, but Austral Resources Limited, AR1. I've never looked at it before. AR1, then we're going to get to gold and silver. AR1, Austral Resources Limited. I'm literally taking a look at this for the first time. This is... It has an $84 million market cap, so again, it's a smaller one. And this one does... Austral Resources focus on its copper exploration and production. Okay, it is a smaller player, but actively involved in copper mining and development projects. Okay, from a technical perspective, it's looking like it's at a bottoming kind of area. Very clearly, you can see right there is its main little bottom. Okay, and it looks like it's done its little liquidity grab. Okay, so it did the thing, bottom there, get people on the wrong side. That is on, yeah, it's not out of the woods just yet. The only thing I would say is if you can remain above here. So this isn't one I would be looking at getting into. It hasn't proven itself yet, I don't think. So that's at 15 Australian cents. I wouldn't touch it right now. It's not showing signs yet. What you would want to see is it, again, bounce off here and break through on a daily time frame at bare minimum. Okay, so here's what you would want to see, and here's where you might consider taking a trade on it. If you come down to here, that 15 cent mark, you come back up to the 17 cent mark and you do that. And you break through there. That looks like it might be a bullish change of market structure. And then I would consider getting into it. And that's through, yep, and it's through that downtrend as well. Okay, great. Bounce off there, yes please. You know what bouncing off there would do as well? That would create, let's see, if we bounced off there roughly, call it wherever you want. That's a higher low with a lower low, so that is hidden bullish divergence. Let's see. Yeah. Yep, higher low, lower low. So if we come down and test 15 cents and bounce off and break through, bounce off and break through 17 Australian cents, that would be go time for me. For Austral Resources Australia, I might take a small position. It's a small cap, so take a smaller position. Larger caps, you can take larger positions. Smaller caps, smaller positions, because more risk, yeah? But that would set up a beautiful hidden bullish divergence for me if you can crack through that 17 cent level and remain above it. So that is definitely one that I am going to keep an eye on, which I already have it on my watch list. And what you'll also get right here is at an alert at 17 Australian cents. Cool. So that is all the potential copper plays on the Australian Stock Exchange. And we also talked about COPX as well. So let's go now to gold and silver and platinum, a quick little check of what we've done overnight, hit the big red subscribe button to join the GMS family. You get a warm and fuzzy feeling when you do, because you want to stay updated with what the hell's going on with precious metals. I've stacked precious metals since 2010, and I have served thousands of customers in my time working over 3 major gold and silver bullion dealers here in Australia. If you would like to have a chat with me, just a quick little plug, if you want to have a chat with me about investing in precious metals, if you're a first timer, if you're thinking about getting into gold and silver, talk with someone who's literally done the same stuff for thousands of customers. Again, when I worked over the counter and phone, email, etc. for 10 plus years in the retail gold and silver bullion industry. Let's do a one-on-one conversation. Let's do a precious metals investment strategy session. It is going to cost you money. Because it's my time. We'll do a 45-minute session. We'll go through your specific needs, your specific wants, and I'll go through the basics and sort of the advanced, intermediate and advanced strategies for how you can invest in precious metals. Do you buy gold? Do you buy silver? Do you buy platinum? What ratio do you buy of each, etc.? How much should you put in? How old are you? What's your risk tolerance, etc.? You need to answer all those questions, so let's do that together. I'll put a link somewhere to the Calendly link here, and then pick a day and time and pay me money, and we'll have a great chat. And I can tell you, the money that you pay for my time is going to very likely save you hundreds, if not thousands of dollars by buying precious metals right the first time, not getting scammed, avoiding the major mistakes, etc. So it's worth the money. Trust me. Here is gold on the daily time frame priced in USD. We are talking $3,300. Unfortunately, we did break through the level that I didn't want us to break through, and that was at 3,325 from this high and this low. We've broken through the bottom end of the zag zone. Not great, okay, but now we need to check where are we from this low and this high, okay. I'll actually go back. So it's not preferable. I actually have been saying, let me show you on the monthly time frame, and so far it is playing out. Do know that we are at the start of the month, but I said yesterday and last week, I just don't like the fact that we've had such a large move and now 1, 2, 3 major spikes. I have been positing that the momentum has been running out. Again, gold is going much higher over years to come, $8,000, $10,000, you never know, even higher, right? Depending on where the world is going. But we did have to take a pause eventually. We've had 1, 2, 3, 4, 5, 6 green months. It's just these last few months have spiked and closed really a lot lower than where they spiked up to. That indicates momentum waning. On balance of probability, I think we see lower prices at least in the next couple of months. Okay, but what would confirm that for me, going back to the daily, obviously breaking there, 3,125, that would be a bearish change of market structure because you'd be making lower highs, okay. I really preferably don't want to see it break below here of 3,250. Let's see, so if I get rid of, nope, that's not what I wanted, I didn't want you either. If I get rid of that and I get rid of you, between here and here, if you want gold to sail through, because you've done all your buying, you don't want to buy lower, you don't want to dollar cost average lower, you're happy to dollar cost average as the price is going higher, sure, I get it. You don't want to see it close below the following price, which is right here, and we've actually just tested it, right? Okay, we had a spike, but a close above it. That's good. I don't want to see it close below 3,290. That's pretty much it. Close below there and we'll probably lower prices. And I'm expecting lower prices to come. So let's do the quick if this, then that. If we are seeing lower prices, if this is not a fake out here. So if we are seeing lower prices from here, what kind of move might we be correcting? There's a couple of major ones. You could say the minor move on the monthly time frame, and we've done this before, but you might be new to the show, is this low and this high. Okay, So the expected support range that you could come down to is anywhere between here and here. That's anywhere between, that lines up with that previous spike down there, doesn't it? Remember we talked about that, 3,120 roughly, anywhere down to $2,900, the one we've spoken about before. You don't want to see that close below there. Otherwise, we probably are, or we might be correcting a larger move. And so the larger move that you might be correcting, excuse me, and that one, and that one, sure. The larger move might be the big one, okay? It might be this big one here. Nope, the big one, okay? When we came up to $2,080, we came back down to $1,800. It was a double bottom right there. That one could be the big one. And so, look, this is not surprising. It wouldn't be surprising if we did that, okay? And this is the level you want to find support at, otherwise not good, okay? So anywhere down between, again, we did it before, so that's the 2,900, 2,850 kind of level, anywhere down to about $2,460, anywhere between there and there. I would probably be favoring here-ish. That's where I think it's probably the lowest-ish it'd probably go down to. There's a big reason for that because of the Moatl. The Moatl, as I dubbed it, is the mother of all trend lines. Okay, actually, you know what? I'd even give it down to freak people out at around about, I'd even give it down to around about there to freak people out. Okay, so I'm going to say no lower than 2,650. Okay, so I reckon if we are correcting a larger move and we're going to see some multiple months of downward movement for gold, I would be watching out for 2,850 to 2,650 roughly. Okay, the mother of all trend lines, the one that goes all the way back to 1980, that's the line you do not want to cross. Okay, absolutely not. Please and thanks. Let me show you. You don't want to break that. So do something like this, and I have spoken about this many times before. Look, you break out of a major trend line, you were going to find resistance somewhere, and I kind of think I had it around this-ish kind of area. Coming back to test here, perfectly normal. Look at this on the macro time frame. That's a little blip. Look at that. That breakout, retest, do that. Oh my God, it's game on for gold, right? That is just multiple months, and we're talking much higher prices, okay, for gold. That would actually be a very healthy move back down to the mother of all trend lines. And some people would be freaking out. I wouldn't be. I'd be like wanting to potentially load up around about there. Again, got to see what, the other indicators are doing at the time. But yeah, bouncing off that roughly $2,800 level, chef's kiss. That would be beautiful. I'm not saying it's going to do that. I'm just giving you the just in case, because it is looking just a little bit bearish for me at the moment for gold. Yeah, it is looking a little bearish for gold. Anyway, that is gold. Let's take a look at old mate silver. Silver is $36.65 on the daily time frame. What I like is that we're still within this uptrend line and in this kind of like some ascending triangle pattern. We tried once to break through that high of $36.90. It was a failed move, fast move to the downside. However, we have remained above this uptrend line. So we've just having this. I like these little spikes. The spikes down are good. It says more so that the buyers are in control of the market. I just need this to hold. And if this doesn't, down she goes. Okay, so this is on the 4-hour time frame. You can see it much better, respecting this uptrend line perfectly. Okay, so the buyers, the traders know what's going on. The buyers are popping in their buy orders around about here, or the institutional investors, whatever it is. Just need to see it crack through that $36.90. Do that and hold above it. Then we're off to the races. Continuing, do that, break there, and we're onwards and upwards to $50, which I think we are eventually. However, if we do start breaking below here, so call it around about 36.30, you'd probably say around about there. And if that's not a fake out, because remember, they fake you out. They try to fake you out to try to shake you out. Okay, so you can still have spikes down to here, and then it goes, haha, sucked in. But if this does break through, I'd call it around about $36.20. Okay, that might be correcting a slightly larger move, and we talked about it. What is that slightly larger move? I think we did it from here to here. Yes, it is. It might be correcting this larger move. So you could come down anywhere into here to that roughly 30, anywhere down to, back down to 35.50, anywhere down to 34.50 would be the first area that I would be looking at. And you really want to find support preferably there. Where does that line up with? Previous resistance basically exactly. So 34.50 is where I'd be looking at, that $34 to $35 level. Watch out for that, okay? None of this I'm saying is going to happen. It needs to first break through that uptrend line. So if it doesn't do that, fantastic. What I prefer, obviously, is just onwards and upwards from here and break that, and looking fantastic for silver. But on balance, I'm kind of just... I will lean towards breaking higher rather than breaking lower. Cool. But I think that's just my confirmation bias and what I'd prefer to happen rather than looking at the technicals. Technicals say unsure at this stage for me. Here is platinum, 1,365 US dollars. The bearish divergence is still playing out where you had the higher high, the lower high on the relative strength index, that one there. Then you had the equal high and the lower high. So the equal high right there, the double top, and then that lowering on the relative strength index. So that is playing out. I have been favoring that we come down to test maybe around about 1,230-ish area. But obviously, not a lot to say. I will remain bearish for the moment, at least down to there, until we break through the 1430 level. If you start breaking up through there, then we'll talk about the next higher target. The next higher target is at 1,630. If I pop you on the macro time frame, actually I'll pop that back on and get rid of you and you. If you're new to platinum, if you've never seen the platinum price before, it is a thing of beauty to behold. Okay, from this high and this low, we've come back to test bang on. Okay, it's exact 1,430. Again, it's the 0.5 Fibonacci from this high and this low. We have to clear through the 1630 area. So I think that might be an area of resistance to watch out for. Once you're through 1630, where are the buyers? The buyers are kind of all centered around this kind of general level here, which is in this zone here, right? That's why it's the zag zone, right? It's the expected resistance zone. Once you're through there, there's a little bit of buying here at the 0.786. Cool, but it's not much. I think once you clear and hold through that 1630 level, we're talking all-time highs, okay, for platinum. And we'll do the blue sky thinking a little bit later on down the track. I need to see at least clear that 1630, but it's looking great for platinum over the longer term. It will break the all-time high. It'll make new all-time highs. As I think gold will, as I think silver will, platinum will follow. Copper's just done it as well. So if you would like to buy platinum, if you'd like to buy gold, if you'd like to buy silver, and maybe one day they might even do copper as well, but you should be purchasing from Perth Bullion Exchange, perthbullion.com.au, my favorite bullion dealer. Why? Because they give you free shipping. Yeah, one of now. There is one other bullion dealer. So Perth Bullion Exchange was the first company in all of Australia to give you free shipping when you buy over a certain amount. It's not a dollar value, it's a quantity value. Have 20 or more items in your shopping cart, you get free shipping. The little free shipping option comes up. It's a good saving. I mean, honestly, no joke, you do deserve free shipping if you buy over a certain amount. And I still don't understand, because I know it's logically feasible and I know it's financially feasible for most bullion dealers to be able to offer free shipping when you buy over a certain quantity. Okay, because they can. I know they can. I've worked for 3 of the major bullion dealers. They could suck it up, okay? But no other bullion dealer in Australia has ever done it since bullion dealers existed in Australia, going back how long? But Perth Bullion Exchange, perthbullion.com.au, started their company in May of last year. They came right out the gate with saying, why wouldn't you get free shipping? Okay, they do it in the States. They do it other places in the world. You can spend as minimal, like as little as like $200 or $300 and get free shipping from like AppMex or SD Bullion or one of those other big boys, right? Perth Bullion Exchange, perthbullion.com.au are now doing it the right way. I think all bullion dealers will follow suit. Okay, that's why I love them. Great prices as well. They price match other major bullion dealers in Australia. You just need to give them a phone call or an email and say, oh, they've got it for cheaper over there. And they go, oh, okay, cool. We'll lower the price for you. And then they lower it on the entire website for everyone else too. This is integrity at its finest, in my opinion. perthbullion.com.au. And once again, if you would like to, head over to masteringthemarkets.com. Why would you want to go to masteringthemarkets.com? Well, they are an amazing educational course. I'm starting their course on the 21st of July. I'm starting their year-long comprehensive. Okay, I'm going to be learning to be a better investor. Do you want to learn to be a better investor? Yes, you do. Are you ever going to say no to I don't want to be a better investor? Sure. No, you're not. Consider doing their 10-week Dow Theory Principles and Technical Analysis Foundations course. 10 weeks. And you'll be a better investor after 10 weeks. Can you imagine that? Learning the basic principles of technical analysis? That's only going to serve you. This is a tool you need in your toolbox if you invest in precious metals, if you invest in anything else. Are you doing it by, are you self-taught? That's good. Okay, sure. You're looking at watching experts and you're learning stuff. That is great. I've learned so much by imbibing other people's content, but I really want to do it the real proper right way. Okay, so Mastering the Markets, masteringthemarkets.com, and I'm doing their year-long comprehensive course. But if you just want to learn from the experts, but you don't want to do a course because you don't have the time, the money, the whatever, okay, at least consider being part of the Mastering the Markets Academy. Now, you do pay for it. It's a monthly subscription, but it's way less than, obviously paying for a course. And I can tell you, being a member of the Mastering the Markets Academy, without even doing a course, my investing and my trading has gotten, I honestly would have to say, 50% better already just by being a member of the Mastering the Markets Academy, not even a course. Can you imagine how good I think I'll be when I start the year-long comprehensive course? But join Mastering the Markets. I'll put a link below somewhere to join the monthly subscription, okay? What do you get? Of course, you get educator calls. You get multiple calls every single week, live streams that you can watch back later on. They are recorded as well. So the next event, for example, is in just a couple of hours. And this is with ASX Trader, very well known on YouTube as an amazing YouTube channel, and this is his school. Okay, so he's the head of the school. He started this thing with his brother, and they've been doing great guns for the last couple of years. And he does 2 calls every single week, a Sunday market scan and a Wednesday market scan. And on the Wednesday market scan, you can pop in the chat function. Oh, can you look at this thing? Can you look at that thing? And he takes a live look as well. So that's just one of the people. This is one of the educators. You've got Jonathan Evans' timescale forecasting. You've got Tung's Macro Sunday. Tung is a decamillionaire who takes the time to teach you about macro principles of investing. It's just amazing. Okay, and you've got Frank Watkins, you've got Craig Dixon's fundamental analysis scan, where he'll take a look at latest announcements from a dig or a this or a report or whatever. He gets into the fundamental analysis, reading reports and all that kind of stuff. So you're learning not just technical analysis, you're learning about fundamental analysis as well, and all the other amazing stuff. It's Mastering the Markets, masteringthemarkets.com. Ladies and gentlemen, that has been Good Morning Stackers, and a really long one because I had to talk about copper just absolutely killing it, making a brand new all-time high. We did everything else we needed to do. The final thing we do is a synchronized slurp, because I do go live on Tuesdays and on Thursdays. You normally get to do the slurp heard around the world with me on the live show, but we'll do another quick one. Slurp your tasty beverage, whatever it is. Here we go. 3, 2, 1, go. That was a long sesh. Thanks for watching, people. Like, share, and subscribe. Stay safe, stay informed, keep stacking whatever you're stacking, and I'll see you again soon.